Hello and welcome to this evening's Clackamas County Assessment and Taxation Property Tax Town Hall. I'm Dylan Blaylock with Clackamas County Public and Government Affairs, and I'll be facilitating the public comment portion of this meeting, the question and answer forum. Joining us tonight are Clackamas County Assessor Bronson Rueda, along with his staff, Deputy Assessor Todd Cooper, Appraisal Manager Lynn Longfellow, Sales Data Analysts Brad Erland and Brandy Peters, Senior Property Appraiser in our Farm Forest section, Jeff Bennett, Taxation Analyst Dina Medicon, and A&T Specialist Susan Brookshire. My thanks to all of you for being here. And now I think it'll just be Bronson and I for a while. So thanks, everybody. All right. Very good. The purpose of tonight's town hall is for residents to gain a better understanding of property taxes and have confidence in the tax system, and for our experts to answer any questions you may have about values, property taxes, or the tax process. Here's how tonight is going to go. Assessor Rueda will open with some comments and a presentation about this year's property taxes. This will last about 45 minutes or so. If you have a question during or about Assessor Rueda's presentation, please don't hesitate to ask it. During the presentation, you can ask questions during the Q&A function or the chat function. Those are at the top or bottom of your Zoom interface, depending on your device. Simply type your question in either of those places, and we'll go ahead and read it during the presentation and get you an answer. Please keep the questions during the presentation general to Mr. Rueda. After Assessor Rueda is finished, we'll hold the regular question and answer forum portion of the event. At that point, you will have two options. You can either, again, use the Q&A function, or you can use the chat function. Now, please know that the questions asked via the Q&A function and answers given to it will be displayed publicly to attendees. And know that this event is being recorded. Therefore, all questions asked over the Q&A function and the answers given will be archived in the recording and posted for others to see. So private information should not be shared. Later, during the open forum, questions asked over the chat function will not be shared publicly, but one of our staffers will respond to you directly via the chat. So, if you do not want to share your information publicly later, you are strongly encouraged to ask your question over chat when I say to, or to contact an assessment and taxation appraiser directly offline during office hours. You can do that by calling the main office line at 503-655-8671, or by sending an email to propertytaxinfo@clackamas.us. And please note that office hours are Monday through Thursday, 8 a.m. to 4 p.m. And I'm going to put all of this information in the chat now. There we go. I will go over all this information again as far as the chat and the Q&A once Assessor Rueda's presentation is over. This town hall will be available to watch beginning tomorrow on the county's YouTube channel. And with that, we're going to go to Clackamas County Assessor Bronson Rueda for his opening comments and his presentation. Assessor Rueda, go ahead.
All right, good evening, everyone. I'm Bronson Rueda, the Clackamas County Assessor, and I would like to welcome you to our annual virtual town hall. I want to start by saying thanks to Dylan for your opening comments and for coordinating all the logistics this year. I also want to thank all the assessment and taxation staff that are here tonight to help answer questions. I appreciate you putting in the extra time to support me and our customers. I also want to tell you a little bit about myself. I've been with the Clackamas County Assessment and Taxation Department for nearly 5 years, and I was elected assessor at the beginning of this year. Prior to my time at Clackamas County, I spent 8 years at the Oregon Department of Revenue in the Property Tax Division, where I managed about 40 appraisers and 3 frontline managers. I also spent 9 years as a commercial fee appraiser. A portion of that time, I managed a team of appraisers that specialized in office and medical office valuations in Oregon and Southwest Washington. I also spent 4 years serving in the United States Army. Veterans Day is about a week away, and to all the veterans out there, thank you for your service. Now, about today's presentations. One of the goals is to help attendees gain a better understanding of our property tax system. I will also give a broad overview of our real estate market and some specifics regarding Clackamas County's property tax data. Like Dylan said, if you have questions throughout the presentation, please ask right away. And we'll also have time at the end for questions. The next slide features a 4.5-minute video giving an overview of Oregon's property tax system. This is the only video I'll be showing this evening, so please sit back and enjoy. It's very informative and can also be found on our website. And Dylan, let me know if there's any issues with the volume on this. Here we go.
This is Joe Meek, one of the most famous men in Oregon history. Fur trapper, mountain man, and the first marshal of the Oregon Territory, Joe was fearless. But Joe had an image problem. You see, Joseph Lafayette Meek was also Oregon's first tax collector. In 1843, voluntary contributions were solicited to pay Oregon's provisional legislators. The first-year returns totaled $81.50. Clearly, an assessment was due and enforcement needed. So the legislators decided to tax virtually everything: a person's pocket watch, their horse, saddle, clothing, even tools of their trade. The next year, 1844, the state assessment roll totaled $218,000, with cattle constituting almost half the roll. And that's the way property taxes started in Oregon. People paid property taxes as a percentage of the market value of their property. It was called a levy system, and has stayed that way for over a century. Now it took a while for Oregonians to begin to appreciate what tax dollars do for quality of life. They provide for schools, law enforcement, and fire protection. Citizens were safer, happier, and more comfortable. Life was good. Then, as it always seems to happen, taxes increased. Part of it was because property values kept rising, but part of it also was that there were virtually no limits on the amount of property taxes that districts could levy. Finally, in 1990, Oregon voters approved Measure 5. Measure 5 placed limits on two broad categories of property taxes: taxes for public schools and taxes used to support other government operations like fire and police protection. Starting in 1990, real estate values really began to climb, negating some of the good that Measure 5 had done. Still searching for relief from rising taxes, in 1996, Oregonians approved Measure 47, which was designed to limit how fast and how much property values could increase. However, the legislature soon found that measure unworkable. It was scrapped and quickly replaced by Measure 50, which was approved by voters in May of 1997. Measure 50 significantly changed the property tax system. It separated assessed value from real market value, creating a more stable and predictable tax bill from year to year. Under the previous levy-based system, taxing districts received the full amount of property tax authorized by the voters, regardless of changes in the total assessed value within the district. Annual changes in value had a direct effect on property owners because the rate was just recalculated to raise the amounts requested by the district, and that made tax bills yo-yo and unsettled the voters. Think of it as a cherry pie. Property owners authorize the districts to tax them at a rate that generates enough money to buy a cherry pie. Each year the district adjusts their rates so that they can buy the entire cherry pie. As the amount of taxable property and its value fluctuates, what they charge each taxpayer changes in order to still be able to buy the whole pie. And when the cost of the pie goes up, so does each taxpayer's property tax bill. Under the new rate-based system, changes in the total assessed value of a taxing district do not change the tax rate. Measure 50 created a maximum assessed value, which was the real market value of your property in 1995 less 10%. Taxes were calculated on the assessed value, which is the lower of the real market value and the maximum assessed value. Since then, growth in the maximum assessed value is limited to 3% regardless of fluctuations in the real estate market, provided there have been no changes to the property, such as new construction. For homes built after 1995, the maximum assessed value is determined using the ratio of maximum assessed value to real market value of similar properties in the county in the year constructed or improved. Long story short, at the time, voters wanted tax limitations and predictability. And while it's not a perfect solution, it is an improvement. If you have questions about any of the content of this video, please reach out to your local assessment and taxation office, and they'll fill you in.
Okay, great. If you like that video, there are more Oregon property tax videos on our website that can be found by clicking on the Measure 5 and Measure 50 tab in the Understanding Property Value section. I recommend viewing them to strengthen your knowledge about our property tax system. Okay, before getting into the meat of this slide, there are two important pieces of information to know. Number one, the assessment date for the values and property tax on your current tax statement is January 1st, 2023. However, the market information used to value your property on your current tax statement is largely from 2022. This is important to remember as we move forward. Next, there will be numerous slides in this presentation that have a lot of data. In most of the slides with data, I will point out highlights and I won't cover the entirety of the slide. So please ask questions if there's something I don't cover that you are curious to learn more about. Now onto the slide. The January 1st, 2023 real market value in our county grew by 6.1%. As a point of reference, last year's real market value growth was over 17%. The paragraph on the right of this slide shows a few stats we had in Clackamas County from new construction. 27 new subdivisions. Last year, we had 32. 900 new homes built. Last year, 1,372. And 1.4 billion in additional taxable value from the new construction. From this information, you can see we grew in 2022, but not as much as the previous year. Here are some January 1st, 2023 statistics from RMLS. And RMLS stands for Realtor Multiple Listing Service, which is an online service providing listings and sales information of residential real estate. This RMLS data is of the Portland metro area housing market. The next slide, we will drill down to Clackamas County stats, but here we will focus on the Portland metro area at a high level, which we are a part of. You can see sales of residential properties continue to remain steady and sales prices continue to rise. The average sale price was up 6.8%, last year 15.8%, and the median sale price was up 7.7%, last year 15.7%. All of the indicators on this page point to an appreciating real estate market. However, as I hinted at already, the upward trajectory of value is not as strong as the previous year. Part of the appreciation slowdown can be attributed to historically low interest rates rising significantly in 2022. As promised, here is some RMLS data showing the change in market values from January 1st, 2022 to January 1st, 2023 for select Clackamas County neighborhoods. Note that the value changes show how diverse our county is from urban to rural and the difference in market change in those real estate sectors. Overall, the positive change is lower than last year's double-digit growth. Mount Hood is the exception with its unique market dynamics, including a small geographic area and a high concentration of vacation homes. Okay, on this slide, we are looking at changes in value according to our internal sales study to reach market value as of January 1st, 2023. Here are all the 16 cities in our county, plus the unincorporated Damascus area. Remember a few slides ago, I stated real market value in the county grew 6.1% overall, meaning the residential market continued to appreciate in 2022. This is a timeline of some of the events for my department. It represents both a calendar year and how we operate on a tax year, which is the same as our fiscal year. And Dylan, can you see my cursor as I move it around? Okay, if you could.
Yes, I can.
Okay, good. So note that January 1st, over here on the left, on any given year is our assessment date. And we don't mail statements until October, way over here. And then the first property tax payment is due November 15th, nearly a year after the assessment date. So let's take a step back and examine the assessment date. January 1st. Let's talk about the time period to collect market data for the assessment date. It's important to make the connection that the market period of your recent tax statement is from 2022. Understanding the timing of these events is crucial. So let's review this information. Starting from November and working our way backwards. Your property taxes are due November 15th. The taxes that you owe are calculated based on the assessed value of your property as of the assessment date of January 1st, 2023. In other words, the values you're looking at on your tax statement represent a point in time 10 months ago. Now going further back, the values on your tax statement are largely determined by data collected from January 1st, 2022 to December 31st, 2022. A portion of that time frame is over a year ago. So this is a lot to absorb. Are there any questions? I'll keep going, and if anything pops up, Dylan, I can go back.
Well, there is one question, but it's more, well, I'll read it to you if you want to save it for later or not, but it's from a gentleman, Ron, and he said, what is the future of property taxation? Will it eventually result in you requiring our entire income with little being done? This is a serious question. So, but he asked that early on. I didn't know if it was really related to your presentation yet, Bronson. I was going to save it for later, but you can answer it now if you want. I'll repeat it. What is the future of property taxation? Will it eventually result in you requiring our entire income with little being done?
Okay, so when he says you, I don't know if he's talking to me specifically or the property tax system. So the Oregon's property tax system is governed by the state legislators down in Salem, your representatives and your state senators. My job is to administer the property tax system. So I administer the laws that your representatives and governors put forth in our statutes. And so I don't think the intent is to overtax people. I don't think the intent is to increase taxes to a point where people simply can't pay. But if you do have any questions about the system, I can explain definitely how it works. But as far as the intent, the legislators would need to answer that, what their intent is on the future of the property tax system. Let me know if you need any follow-up on that. Was it Ron?
Correct.
Yeah. If you have any follow-up, let me know.
Okay. Very good. Go ahead. Go ahead, Bronson.
Okay. Next slide. Let's see here. All right. The next group in the slides covers property tax law, specifically Measure 5 and Measure 50. I will cover these two measures in detail in later slides, but at a high level, our property tax system is shaped by these two initiatives put on the ballots by voters that are now part of our Oregon Constitution. I typically try not to read slides, but I think this slide warrants an exception. So up here, Measure 5, passed in 1990. But hold on, I have to move the box. There we go. Sorry. Measure 5, passed in 1990, is a tax limitation and sets limits on the amount of taxes that can be collected from each property in both the education and general government categories. Measure 50, passed in 1997, is a value limitation and limits maximum assessed value growth to 3% annually. Taxes are based on the lower of real market value or maximum assessed value. In addition, permanent tax rates were established for all local taxing districts with existing tax basis and serial levies. The big takeaway here is that Measure 5 is a tax limitation and Measure 50 is a value limitation. Neither one of these measures places a 3% cap on your tax growth per year. We will dig deeper into this later in the presentation. All right, it is important to understand two items, which are covered in the first two bullets of this slide. One, property in Oregon is not taxed on real market value. Two, property taxes in Oregon are based on a calculated Measure 50 assessed value. Now, for those familiar with California's Proposition 13, established in the late 70s, in Oregon, market value does not reset when a property is sold. And finally, taxes in Oregon are calculated on the assessed value, which is the lesser of real market value or maximum assessed value. And there's a lot to keep track of here. And some of this you may recognize is repetitive, because I think repetition is a key to understanding Oregon's complex property tax system. But here's the bottom line. Typically, the maximum assessed value is equal to the assessed value, especially for residential properties, which is what taxes are based on. So maximum assessed value can only go up 3% per year, with some exceptions, which we'll cover later. This creates the predictability of property taxes, which is what Oregon voters were looking for. So one more thing to think about, if you're saying to yourself, well, if maximum assessed value can only go up 3% per year, why do my property taxes sometimes go up more than 3% in a year? One answer is new construction or remodeling a property. Another common answer is that voters in any given taxing district can vote in local options or bonds that can increase a property tax bill more than 3%. Said another way, a new local option or new bond will most likely increase your property taxes more than 3% for the first year of that local option or bond. Any questions on that, Dylan? All right, we'll move on.
No, go right ahead.
Okay.
Well, if there is one, I'm sorry, Bronson. There is one, and it's related back, I believe, to the talking about the property tax statement and the appraised value. One person asked, the real property tax statement I received this year has the dates of July 1st, 2023 to June 30th, 2024. How do those relate to the appraised value before January 1st, 23?
So the tax year, which is on your tax statement, is the July 1st of 2023 to June 30th, 2024. And the assessment date is January 1st, 2023, which is before that July 1st, 2023 date. So there's kind of a 6-month gap between when the assessed value point in time is, January 1st, to when the tax year actually starts. And that's what creates confusion as to, well, you know, I get my tax bill 10 months later, and in a year where market values may have declined or not increased as much, but they increased a lot in the previous year, that can create a lot of confusion. And so those dates are important to recognize and to understand.
Okay, very good.
Yeah.
Go right ahead. Thanks.
If there's more follow-up on that, let me know. I can go back to the calendar that I had up there, and we can go over that in more detail.
Actually, the person just said, thank you very much. Gotcha. So
Okay.
very good.
Okay. So now we're going to start getting into some details of Measure 50. But before I get into what Measure 50 is, I think it's important to understand why we have Measure 50. And the video that we watched went into this. So prior to Measure 50, taxes were based on the market value of a property. And as you know, market values can fluctuate up or down in any given year. Pre-Measure 50, property taxes fluctuated up and down accordingly, creating a property tax environment that was unpredictable. Remember, this year in Clackamas County, the market value increased over 6%. And last year, their market value increased over 17%. I imagine most people would get frustrated if their tax bill fluctuated between 6% and 17% in any given year. I know I would. I live in Clackamas County, and I would be frustrated by that. Well, the voters of Oregon wanted more predictability or consistency in their property taxes, so Measure 50 was born. Okay, so how does Measure 50 work? Let's go over the bullets on this slide. Bullet 1, when Measure 50 passed in 1997, maximum assessed value was created, or MAV. Maximum assessed value equaled 90% of the 1995-1996 real market value, or RMV. Bullet 2, going forward, Measure 50 limits future growth on maximum assessed value to 3% per year, with some exceptions. What are those exceptions? Let's look at bullet 3 and find out. The exceptions include new construction, remodeling, development of new subdivisions, and rezoning. Bullet 4, Measure 50 established permanent tax rates for all local taxing districts with existing tax basis and serial levies. Then the last bullet, Measure 50 allowed voters to approve new short-term local option levies to fund additional services or approve bond measures for capital improvements. These items are one of the main causes of property tax bills increasing more than 3% in a year. I will also note that the Oregon Department of Revenue teaches a 3-day class covering this Measure 50 topic, which proves the complexity and many dimensions of Measure 50 and Oregon's property tax system. So that being said, if you ever do have any questions that aren't answered tonight to your, adequately to in your opinion, and need more information, feel free to call our office, talk to me, or talk to any one of our staff that may be a subject matter expert in the arena that you're calling about. All right, this slide covers examples of how your taxes may go up more than 3% in any given year. Remember, neither Measure 5 or Measure 50 put a limitation on tax growth, just tax limitation, and a maximum assessed value growth limitation, respectively. The two most common examples are the first two numbers on this slide: changes to a property and new money measures. I want to emphasize again the point that taxes can go up more than 3% in a year. Okay, this slide covers the value history of one account in Clackamas County. The time period begins in 1997. Here we are, 1997, my cursor's up there. The start of Measure 50 and ends with this year's value. You'll notice there's a break in years from 2000 to 2010 because there simply isn't enough room on the page for all the data. But the data does cover the recession years in the early 2010s time period. Now the term cut, up here in the upper left in red, cut, refers to the 10% off the 1995 value to establish the first 1997 maximum assessed value. The term cap, in all the other years, refers to the 3% growth cap for maximum assessed value, again with exceptions. Again, I want to emphasize that 3% maximum growth refers to the growth limit for maximum assessed value, not a growth limit in tax increase year over year. What stands out on this slide for me is the market change in red right here, and the AV change, assessed value, down here, also in red. The market value fluctuates according to what the real estate market does in any given year, with big swings up and down. But the assessed value grows at a steady 3% pace. Look at the market change of negative 7.6 and negative 12.75 in 2011 and 12. And then the growth in market change over 10% in 2014 and 16. Big swings in value. Remember, property taxes are based off of the assessed value. This is an example of the property tax predictability taxpayers wanted. You can see down here, assessed value going up 3% every year for this tax account. All right, now we're going to discuss change property ratio. Just when you thought things weren't confusing enough, we'll throw in another variable, change property ratio, also known as CPR. So what is this change property ratio? Well, remember Measure 50 was enacted back in 1997, and it created a maximum assessed value benefit for all property at that time. But what about property built post 1997? How do they get a maximum assessed value benefit? Well, for new construction, the assessor's office values the property, which creates a real market value. Then a change property ratio is applied to the real market value, which creates a maximum assessed value for that property, providing a benefit similar to property already in existence. The CPR is a ratio of maximum assessed value to unchanged real market value for specific property types and is calculated every year.
Bronson, can I interject with a quick question from an attendee?
Sure.
Tara had a question, just to double check. The AVR can only raise 3%, but the taxes can go up more depending upon the tax measure, such as school funding.
So you said AVR, it's AV, assessed value.
Yes.
If that's what they're referring to. So AV typically, don't use the word only. It's not only. There's in our system, and in most systems, there's very rarely absolutes. There's usually always exceptions. And so for as assessed value, it typically goes up 3%, but there's exceptions where it can go up more than 3%. And for so I think that answers the question. If not, please clarify, and we can keep it going.
Okay. Yes, she got it. Yes. Yes. She says yes.
All right. So here we're going to look at the CPR change property ratio history. Here's a list of the Clackamas County CPRs since 2013. Take a look at the column labeled 1X residential right up here. The CPR for residential properties in the 2023-24 tax year is 0.523 in red right here. This means that any new property built in 2023 will have that ratio applied to the real market value to create a maximum assessed value. As you can see, since 2013, the residential CPR has generally decreased. A decrease in CPR happens when property values are rising. If we hit a recession and property values decline, the CPR will most likely move towards 1. And note I said most likely, never absolutes. Let's look at an example here. All right. Remember, Measure 50 created a tax benefit for properties in existence in 1997. But for new property, it's fair to give that same benefit. Let's say a property owner builds a new home valued at $850,000, which is the real market value. We need to give this home the Measure 50 benefit and calculate the maximum assessed value. We apply the 2023-24 residential change property ratio of 0.523 to the real market value. After applying the residential CPR, the maximum assessed value is created, which is $444,550. Lastly, taxes are calculated from the assessed value, and the assessed value equals the lesser of real market value and maximum assessed value. And in this example, the maximum assessed value is lower than the real market value. So the property has an assessed value of $444,550. This creates a Measure 50 tax benefit similar to other properties already in existence. So I'll try to use my hands. RMV for residential property is usually up here, and your maximum assessed value is typically lower. And your assessed value, what you're taxed off of, is the lower of these two, which is usually the maximum assessed value. So the maximum assessed value is typically the assessed value, lower than the real market value for residential properties. Again, there's always exceptions. Okay, I have talked about Measure 50, the benefits provided, and the creation of maximum assessed value. I gave an example of how new construction creates an exception event, creating a maximum assessed value for a property. But there are other exception events besides just building a house. This slide covers those exception events like remodeling and additions. To tie the concept of Measure 50 back to the misconceived perception that property taxes can only go up 3% per year, nearly every Measure 50 event will increase maximum assessed value more than 3% on a property because you're adding more value than was there before. All right, the next 5 slides I think are interesting and kind of fun. They provide examples of new construction or remodels that trigger Measure 50 exception events. This first one is an example of a house that was torn down for new construction. Here's another example of a house that was torn down and then a new house built in its place. Here's an example of a kitchen remodel adding value to an existing house. You can see there's new cabinetry, new tile backsplash, new flooring, new recessed can lighting. Here's another kitchen remodel adding value. This one, it looks like they had a peninsula style island coming that jets out in a perpendicular manner from the wall, changing it to an island style kitchen. This last one is a bathroom remodel. When I looked more closely at this, I couldn't tell if this sink area was built in or if it was one of those one-piece pieces of furniture that you can buy from a store and just have it installed. You can make your own judgment, but in any event, it's new cabinetry with new countertops, dual sinks, replace the bathroom or the toilet here and put in a shower tub area.
Bronson, we do have one question via chat.
Sure.
Are there any reasons the 3% value could decrease?
Okay, so the 3% of value, are you talking about assessed value, maximum assessed value, real market value?
I believe in looking at the person's previous question, it relates to the maximum assessed value rate of the 3%. I think they were asking, is there any way or any reason that it would decrease?
Yes, the way, okay, so maximum assessed value, we'll talk about this a little bit. So maximum assessed value, if you have a new house and the year it's completed, we'll say 2023, it was completed this year, or 2022, it was completed in 2022, went on the January 1st, 2023 tax roll as a fully 100% completed house. And we just talked about how we put an RMV on that house, and we apply the change property ratio, and that creates the maximum assessed value, the MAV. So the question is, can that MAV ever be lowered? So that first year, it's very important that when a house is built, or if you do a remodel, that you take a look at your values, because if you disagree with those values, you can appeal those values. And if you're successful in the appeal, then that maximum assessed value can be reduced in that first year. But after that first year, that MAV, this is per statute, that MAV is set, and there are limited ways that can be reduced. And so after that first year, it's almost as if you're in a too late scenario. So it's very important for taxpayers, if they have new construction in any manner and their MAV was impacted, that they take a look at that to see if they agree with those values. Because if they don't, file a tax appeal, talk to our office, let us know what market evidence you have that constitutes a lower value, warrants a lower value, and we'll take a look at that. Let me know if there's any follow-up, Dylan.
Okay. Very good. Thanks.
All right. All right. This slide is a snapshot from our website. The search engine allows you to put in your account number or address, and it shows a 5-year history of your real market value and maximum assessed value. Remember, you are taxed on your assessed value, which is the lesser of the real market value and your maximum assessed value. So in this example, the assessed value has always been equal to the maximum assessed value, represented by the blue line here, because it's always been lower than the real market value. This slide also makes the point that market adjustments can be more extreme than the typical 3% yearly growth of maximum assessed value. For this property, maximum assessed value has grown 3% since 2019. You can see that represented by the blue line. Whereas real market value has fluctuated. In 2023, it grew by 1.32%. And in 2022, it grew by 19%. One interesting fact, back in 2012, we had about 47,000 properties in Clackamas County. And to put things into perspective, we have about 170,000 accounts. So 47,000 properties in Clackamas County, where the red line here dipped below the blue line. And this year, it was 11,091 accounts that dipped below that blue line. Okay, now we're going to move on from measure 50 to our next constitutional limitation, which is measure 5.
Actually, Bronson, can I cut in and ask a question that was related to your slides before? This actually is from Ron. It was related to the 1 year. I think it was related to the differences in the remodel slides that you were showing a second ago. How can you tax on a bathroom and or a kitchen remodel when you don't really know the value of the upgrade until the property is sold with the new addition?
So, good question. So we value property, either a remodel or new property, based on the cost approach to value. So the cost approach, there's, I may be going into too much detail, but there's 3 approaches to value in appraisal. One approach is the cost approach, where we look at what are typical costs for a new house, what are typical costs for a bathroom remodel. And so that cost approach is what gives us the value for either remodel or building a new house. Cost approach. And Ron, if you had a remodel or a new house, recently, then you can call our office and we can kind of go through the costs that we used and break it down for you. We have that ability. All right, let me know if there's any follow-up on that, Dylan.
Okay.
Okay, moving on to measure 5. So again, measure 5 limits the amount of taxes that any one taxpayer can pay. The limits are based on real market value and fall into 2 categories: education and general government. The limitation on education is $5 per $1,000 of real market value. And the limitation on general government is $10 per $1,000 of real market value. It is important to note that the tax limitation calculation is applied to the real market value, but the actual tax is calculated from the assessed value. If the actual tax due goes above the measure 5 limitations for either category, compression is created. Can this get any more complicated, this Oregon property tax system? But let's look at an example on the next slide. All right. At the top, there are 2 values that I will be referring to: real market value and assessed value. Both below the values, there are 4 column headers: measure 5 limit, tax calculation, tax imposed, and tax compression due to measure 5. The next row is education, which has a limitation of $5 in tax to every $1,000 in real market value. I've already done the math here, but I'll still walk you through the numbers. The measure 5 limit on education is $2,596.42. This is calculated by dividing 5 into 1,000 and then multiplying the result into the real market value. Real market value above right here, $519,285. The next column is tax calculation. The education rate is given near the bottom of the slide under the header actual tax rates, down here, actual tax rates, education. The rate is 7.3012. This number is per 1,000 of assessed value. Assessed value is near the top, 366,039. The resulting tax owed is down here in the tax column, $2,672.52. You can see the resulting tax calculation is more than the measure 5 limitation allows. So the lower number is over here, the tax imposed, represented in this column. The tax limitation creates compression for this taxpayer in the amount of $76.10. the taxpayer is saving money by paying less taxes. But on the flip side, the taxing districts in the education category receive less money into their coffers. It's kind of a double-edged sword. The next row is for general government. Using the same methodology as the education row, you can see that the Measure 5 limit of $5,192.95 is much higher than the tax calculation of $3,089.80. So the tax imposed is equal to the tax calculation. Therefore, there's no compression for the general government category. The next row is for bonds. Bonds are voted in by the people and are not subject to Measure 5 limitations. Now, if you're being exposed to this for the first time, it's a lot to take in. I'll ask again, Dylan, any questions on Measure 5? And while I'm waiting, but no? Okay.
No, I would keep going.
Okay. And if you have questions on your specific property, you know, if you want to find out if you have compression for your property tax account, please give us a call. We can walk you through your property tax values and your bill. And we can either show you, we can tell you that there's no compression or there is compression. And we can also show you how in future years you can find that information on our website and do those calculations yourself if you want to. Whoops. Okay. Okay. We have talked about how our tax system works and the market conditions for Clackamas County. Now let's focus on some of the results for the current 2023-2024 tax roll. Mentioned previously, there was a 6.1% growth rate in real market values for the county as of the assessment date of January 1st, 2023. And most properties' assessed value grew by 3%. If you're one of the taxpayers who had a tax increase of greater than 3%, it may be due to a new money measure passing, a district levied more for bonded debt, or a local option rate increase. Likewise, if you had a tax increase of less than 3%, it could be due to taxing district levied less or paid off debt. Regarding compression, tax savings have decreased for many property owners due to increasing property values. This year, we have 13,678 accounts in compression, which equates to about 10.2 million in reduced tax. For comparison, last year we had more accounts in compression, 15,090, but only 9.2 million in reduced tax. Now let's look at the taxing districts that had the greatest amount of tax rate change, either up or down. All right, this slide shows the changes in levy rates for 2023. Take a look and see if any of these taxing districts are in your tax code area on your property tax statement. It may be an indicator of why your property taxes decreased or increased less or more than you anticipated. Where there are negative changes in red, those districts levied a little less for their bonds. There is one new bond this year and 3 local option levies. Up here, the new bond, City of Tualatin, they had a net increase of 0.2608 cents per 1,000 of assessed value. Now, a little cheat sheet, if you want to see how that applies to your taxes, what you do with this 0.2608 is move the decimal place over 2 spots. So it's $26 essentially. And then times that $26 times each 100,000 of assessed value. So if you had an assessed value of $600,000 times $26, that represents an increase of $156 for that levy. So you can see bond increases and new local options really increase your property taxes. All right, the 3 new local options are at the bottom of the page down here and include monitor fire, 50 cents, Shorewood School, $1.50, and that's a big one. but there are very few Clackamas County taxpayers that fall into this taxing district. And then Clackamas Fire up here, 52 cents. And that increase impacts over half of the property owners in Clackamas County. There's also one local option increase down here, and that's 50 cents for the Canby Fire District. And that's not a new local option, but it's an increase to the current local option. Holistically, you need to take a look at all the taxing districts on your property tax statement and the offsetting increases and decreases in rates to determine how rates impact the total taxes owed for this year for you. And again, if you have specific questions on what each taxing district uses their money for, you would need to contact that taxing district. Okay, the previous slide outlined the money measure changes in the county. This slide outlines the result of what property taxes actually did on average. So take a look at this and see where your property lands. I live in Canby Rural, which is up here near the top. So my taxes had an increase in that area of 5.76. So I am one of the county residents whose taxes went up over 3% this year. Remember, factors that control how much your taxes change from last year include new voter approved money measures, Measure 50 exception value, compression, and taxing districts levying lower or higher rates. I'm going to move on to the next slide, Dylan. So if somebody wants to move back to this one so they can take a closer look, let me know.
Nope, your staff is doing a good job of answering some specific questions in the chat right now.
Oh, okay, great. Glad to hear they're active. All right, you have seen a taxing matrix similar to this a few slides. Well, Dylan, I guess if there's people asking questions, if there's multiple people, do I need to take a pause while some of those questions are being answered? So I would hate to have anyone miss some.
No, I think you can keep going, Bronson. The one just did come in that I believe is relevant to your presentation specifically. And it just says, and I'm sorry if I'm getting this wrong, Linda, why is this an average? Why would my taxes increase more than the percentages posted?
So these are averages that we pull from our property tax system. So your specific account probably isn't going to be exactly what this average states. It's going to be either higher or lower. In my case, and for my property, unfortunately, my taxes went up more than the average for the Canby rural area, the 5.76. My taxes went up more than that. And so these are listed averages for these taxing districts. So your property, specific property, could be lower or higher. Most likely will be lower or higher.
Very good.
Okay. All right, this slide, let's see, where are we here? Okay. So again, this is a matrix that you've seen before. In the previous matrix, the calculation showed compression. In this matrix, it shows a tax change of 6.94%, which is obviously greater than 3%. Let's examine why. Looking towards the bottom of the slide at the rate change column, so down here, rate change column, you can see 2 of the 3 tax rate categories went up a total of 53 cents per 1,000 in assessed value. Down here, you can see the general government went up. Here's the rate for this year. I don't have last year's rate listed on here, but just what the rate change is from last year to this year. So for general government, went up a little over 50 cents, and for bonded debt, a little over 3 cents. And so this caused an increase in tax greater than 3%. And again, if you have specific questions about your property and your property tax, let us know. We can help you look at your account to determine the reason for any tax change above or below that 3%. And you can ask those now during this presentation, or give us a call tomorrow or anytime that we're open, and we'll be more than happy to help you. All right. This slide, it shows a lot of interesting data. If you focus on the 2023 column over here and work your way down, you can see the value and tax numbers that Clackamas County has and the changes in the past couple of years. This year, the county's real market value is over 117 billion. And the way that Zoom has my presentation, I can't see the number, so I'm just going to point it. I think it's right here. Hopefully that's where it is. And the taxable value is nearly 64 billion right here. And the tax imposed is over $1.1 billion. And I want to give a quick shout out to my staff for valuing all the property in the county every year. That's over 170,000 accounts. And for collecting the property taxes. They do a huge amount of work as public servants. And then one interesting fact, we typically collect 87% of the imposed taxes by the November 15th due date. And again, imposed taxes up here, over $1.1 billion. So for this tax season, that's about $980 million that we'll collect in the next 15 days. And I think that high collection rate, in my opinion, 87% is a high collection rate. I think that high collection rate can largely be attributed to the 3% discount offered to taxpayers when an account is paid in full by November 15th. So in case anyone out there didn't know, you pay your property taxes in full by November 15th, you get a 3% discount. Whoops. All right, one other item I want to point out on this page that I think raises an eyebrow, at least my eyebrow, is the second row from the bottom labeled taxes up greater than 4%, right down here. You can see this year that over 98,000 accounts, or 59%, fall into this category. This is a lot, and last year as well. This is due, and it drops off in the previous year, 2021. And these high amounts are due to new or increasing money measures that are voted in by the taxpayers or by the voters. All right, let's move on to some more statistics. This slide shows 22 years of the change in market value, over here, market value, and assessed value of all the accounts in Clackamas County, cumulative, all the accounts. This time period is post Measure 50, and you can see the ups and downs of the market value growth rate, including the recession years, 2009 through 2012. Right here, you can see the negative amounts, where we had 4 years in decline before it started to turn around to double-digit growth. So you can see 2013 it grew, and then we ran into some double-digit growth percentage-wise. Now look at the assessed value column over here. Note that every year the assessed value increased no matter what the market value did. So every year it increased no matter what the market value did. This is due to the yearly 3% maximum assessed value growth on most accounts for Measure 50. Not one year did the assessed value growth show a negative number. However, the growth of the assessed value did dip below 3% in the 2010-2012 timeframe. You can see that here, below 3% growth in assessed value. That was because there was less construction and more accounts paying on market value instead of maximum assessed value. This slide also shows the predictability of assessed value due to Measure 50. Again, if there's any, I'll use my hands again. You have your real market value here, your maximum assessed value down here. When we had the recession, the real market values went down, but not far enough to reach where the MAV was. And even though the MAV kept increasing 3% a year, the RMV didn't get down to overall to that maximum assessed value. That's why taxes, the tax growth kept going up. All right. All right, this slide showed how values fluctuated and grew over time. It focuses on changes in taxes imposed since, the last slide showed how values fluctuated and grew over time. This slide focuses on the change in taxes imposed since 2000. Items of note on this slide include first, the 2010, 2012, the growth rate in taxes dropped significantly due to the recession. Right here, growth dropped significantly. And note, again, taxes still increased every year, just not at the rate seen in other years. And then the second thing to point out, in 2019, the growth rate in taxes was high because of many measures voted in, new construction, and the normal 3% growth rate. All right, let's move on to the next slide, which is our last slide with current tax year statistics. I think this is an interesting slide that shows the compression loss each year since 2009. Remember, compression loss typically increases when market values are going down and coming closer in line with the maximum assessed value. And then compression loss typically decreases as real estate appreciates and there's a greater separation between real market value and maximum assessed value. Look at the chart to see how this is shown to be true from the historic numbers. From 2011 through 2013, down here, when market values were generally declining, compression was increasing. You can see here the compression increasing from 12 million up to 20 million. Then in 2014, when the real estate market was rebounding, compression loss started to decline. 2014 goes from 20 million down to 13 million, so declining. The anomaly here is in 2019. Where are we? 2019, when real estate market values were continuing to increase, but the compression loss also increased. This was due to many measures passing that increased the tax rate significantly for certain taxing districts, and that created compression. This year, compression also increased. Here we are right here. This year, it also increased with market values increasing. And if you recall from a previous slide, there were 3 new local option levies and 1 local option levy increase passed this year that created compression. All right, now let's go to the next slide and see how all these tax dollars are distributed. This graphic displays how much out of each property tax dollar collected goes to the local services in the county. Starting on the upper left is the schools K through 12 that receive 42.58 cents of every collected tax dollar. Next is the county, which receives 17.84 cents for every property tax dollar collected. Ending on the lower right is the miscellaneous category, which includes port, vector, cemetery, water, parks, and lighting. And that's shown down here. Miscellaneous includes. All right, here is, I did change slides, just so you know, this is another dollar bill graphic that shows what amount of each tax dollar distributed to Clackamas County, not my department specifically, but to Clackamas County, goes to various programs in the county. You can see in the upper left, public safety gets the largest share at 63.4 cents of each dollar. My department, assessment and taxation, over here on the right, upper right, we get 4.6 cents for each dollar. And then over here to the right of the dollar bill lists the programs in the general government category, which receives 14.6 cents per dollar collected. And these dollar bill graphics are also on our website. And we have a lot of information actually on our website that you could go on there and explore and learn more about the assessment and taxation department and values, both in the current year and historically than your neighbor knows. All right, let's move on to the sample tax statement. All right, this is a sample property tax statement, and there's a lot on here, but I'm going to focus on the right side of the statement over here. Near the top, in a rectangular outline, are the words 2023-2024 current tax by district, right up here. This is a detailed list by taxing district of the property taxes owed. The first 4 lines comprise the education category, right here. The next grouping of taxing districts is the general government category. Remember, these 2 categories are subject to compression through Measure 5 tax limitations. The last group has 6 line items, and notice at the end of those line items, it says excluded from limit total, right here, excluded from limit total. These line items are bonds voted in by the people, which are not subject to compression through Measure 5 tax limitations. The last item I want to point out on this tax statement is the e-notices information right here. This e-notices information, which includes an authorization code. And this is not a valid authorization code, just so you know. You can receive your tax statement electronically instead of receiving a paper copy in the mail using the authorization code on your property tax statement. And I'll talk more about e-notices later on in the presentation. Dylan, any questions on this tax statement or anything lingering out there that needs to be addressed?
No, there's a few questions that have come up, but we can wait till the end of the presentation. I've already talked with most of these people. So that's fine.
Okay, that's good. I will note we also have a property tax statement guide on our website that goes into greater detail explaining different areas of the property tax statement. And also that property tax statement guide was delivered in the mail if you received your property tax statement via mail in the same envelope as your tax statement. So take a look at that if you want to learn more. All right, now we're getting into the appeals section. We talked about appeals a little bit previously in this presentation due to a question that was asked. But now we're going to get into the slides, the appeal slides. The next 4 slides deal with the appeal process. And it's important to note that in an appeal situation, a person is appealing their value. They're not appealing the amount of taxes owed. Remember, for most taxpayers, their real market value is higher than the assessed value. So if your appeal results in a real market value reduction, there still may not be any tax reduction if the real market value does not go below the assessed value or result in Measure 5 compression. Referring to the last bullet on the slide, if you have new construction, and we talked about this earlier, if you have new construction or another Measure 50 exception event, like you did a remodel, and you think your value is too high, then you need to appeal because the first year after an exception event is what sets your MAV. After that first year, it's too late to set that MAV, and that MAV is typically what your assessed value is based, or what your taxes are based off of that assessed value. And by appealing that first year, it can, if we did value it too high, which happens, that's why there's an appeal process. If we did value it too high, then that MAV will also most likely be reduced. All right, this information on this slide is very important, so I go through each bullet on this slide and the next slide. So bullet 1, call our office and talk to an appraiser, and we can check to ensure our records are accurate and let you know if you may receive a tax decrease based on your requested value. Again, we're not perfect. There's over 170,000 accounts in Clackamas County, and sometimes we don't have accurate information. So if you feel we don't have accurate information, give us a call and let us know what you think needs to be corrected. Bullet 2, appeals are processed through the County Board of Property Tax Appeals, referred to as BOPTA, and this is the official first step. Bullet 3, BOPTA is administered by the county clerk's office, not by our office. Next bullet, typically the appeal paperwork must be filed by December 31st. However, because this year, December 31st falls on a non-working day, the appeal paperwork is due Tuesday, January 2nd, 2024. But I recommend if you're going to appeal your value, get it in sooner rather than later. Bullet 5, BOPTA hears value appeals, not appeals of your tax you have to pay. The bullet 6, any value shown on your tax statement can be appealed. I'll go back up to bullet 5. BOPTA hears value appeals, not appeals of the tax you have to pay. But if your value is reduced, it could result in a tax refund for that year. Last bullet, the board starts to consider appeals on the first Monday in February, and the process ends by April 15th. All right, because I think appeals are so important, here's some helpful hints to the appeal process. Bullets 1 and 2, remember the assessment date is always January 1st for every tax assessment year. This is the date we determine value. For your current values on your tax statement, the assessment date is January 1st, 2023. Next two bullets, 3 and 4, the petitioner has the burden of proof. This means the petitioner will need to have market evidence that shows support for the claim that the assessor's value is incorrect. Bullet 5, what does preponderance of evidence mean? The petitioner must persuade the BOPTA board that it is more likely than not the facts presented are true. And then the last two bullets, this information includes a couple of common mistakes. One, comparing your property tax to your neighbor's property tax, and these are mistakes for the BOPTA process. Remember, you are appealing value, not taxes. And common mistake number 2 is comparing your values to the values of your neighbors. Your neighbor's home may or may not be similar to your home, and your neighbor's home may not have sold. So it's recent sales that will be convincing to show a different market value than what we have. For the next slide, let's get into some of the information that will help you in the appeal process. All right, this is the last appeal slide, and this is a list of supporting documentation that will help in an appeal. First bullet, a recent sale of the property. So if you purchased your home near the assessment date in an arm's length transaction for $650,000, and we have it valued at $850,000, that could be an indicator that we have your property valued too high. Submit an appeal. Next two bullets, a recent fee appraisal. An appraisal will have a list of 4 or more comparable sales that support a value, which is what bullet 3 is describing, a comparison of sold properties similar to yours. Again, it may not be your neighbor's property because that may not be similar according to appraisal standards. Bullet 4, some sort of proof that we have an error in our records. For example, we have your home listed as 2,200 square feet, and it's only 1,800 square feet. Bullet 5, construction costs can be an indicator of value for new construction. And then the last bullet, income and expense information for income producing properties like office buildings, retail centers, and multifamily housing. All right, that's it on appeals, and we only have a few slides left. Let's see here. Okay, I'm not going to spend a whole lot of time on these next 2 slides, but there is contact information if you would like to talk to a subject matter expert. We do have farm and forest land deferral programs. Jeff Bennett, who's also on this webinar, is here to answer any questions on farm forest. And his contact information, if you want to call tomorrow or anytime that we're open, is displayed here on the slide. And at the bottom of the slide is a snapshot of our website where you can also go to obtain more information, including eligibility requirements on these 2 deferral programs. This slide includes the contact information for our expert on the senior and disabled deferral program, and for veterans and active duty military exemption programs. And again, speaking of veterans, next week is Veterans Day. I'm a veteran and served 4 years in the United States Army. And I want to say again, thank you to all the veterans and current service members out there for your service. I appreciate what you have done and what you're currently doing for our country. All right, I mentioned before that I talk more about e-notices. So here is the slide on e-notices. Again, you have the option to receive your property tax bill online instead of in the mail. To do that, you need to sign up using the registration code that is on your property tax statement. And you can go on our website. It'll have information on how to sign up. And if you have any difficulty at all, or you just want step-by-step instructions, call our office, talk to one of our staff members. They can walk you through how to sign up for e-notices. I will note, if you do sign up for e-notices, paper statements will no longer be delivered. You'll get those e-notices electronically, which comes, an email is sent to you in your email that provides a portal to go to our e-notices platform. So e-notices save steps, it saves stamps, it saves time, and it saves trees. So this is the question portion of the slide, but before I get into questions that may be lingering out there, there were 6 questions that were submitted prior to this webinar that I will address now. And they all deal with ProVal, and we'll get into what ProVal is. So the first question asks, what is a ProVal? What does the name stand for? So ProVal is our CAMA system, and CAMA, C-A-M-A, stands for Computer Assisted Mass Appraisal, and is our core software for value property. When we refer to a ProVal printout, we are referencing a printout of the appraisal for the real estate and inventory for any given property. Question 2, what information is found on the ProVal? So again, the inventory is on the ProVal statement, including land and improvements. It has property class. It has the neighborhood the property is assigned to. It has values for the past 3 or 4 years. And each year we archive the ProVal data sheet for the next tax year. Question 3, how can taxpayers get their ProVal for their property? Call our office. Call our office, 503-655-8671. And that number will be displayed, I think, at the end by Dylan. And I think it was already submitted in the chat box at some point in the beginning. So call us up, and our number is online on our website. Ask for a copy to be emailed to you. You can also come to our office, talk to us, and get a copy that way. Question 4, if we have questions about the ProVal, who do we talk to? So when you call our office, specifically ask to speak to an appraiser. Appraisers are the ones that can help you with any questions on ProVal. Question 5, would you explain the quality class grade on the ProVal? So quality class is one of the factors we use in our cost approach to value. Remember, if you build a new house, we take costs, our market cost, to determine what that value, what that property is worth. So class is one of the factors we use in our cost approach, which is used in our CAMA system and determines the quality of construction and helps determine the cost per square foot for improvements. Last question that was pre-submitted. Why should the taxpayer know about the quality class grade? How does it affect our taxes? So the answer to this is class grade is a tool appraisers use to determine value. Taxpayers should be looking at the total value on their tax statements and understanding what those values represent. For instance, are the improvements 100% complete, or are the improvements partially complete? because when you have new construction or renovation, like we talked about, if you don't agree with the value, it is important you appeal in the year the new construction took place, because that is the year maximum assessed value is set. The maximum assessed value is typically the assessed value, which is what taxes are based on. After the year of construction, maximum assessed value typically cannot be lowered. So that, Dylan, if we can open it up to any questions that are out there, myself or any of the staff that is on hand here can answer.
Very good. Thank you, Mr. Assessor. Bronson, if you could go ahead and stop sharing your screen, that'd be great. Okay. So with that, as Assessor Rueda said, we will take questions from the public. Again, there's two ways to ask questions. We have people who have already asked some, and that's great. I'll pose them to the assessor in a moment. But you can either use the Q&A function at the top or bottom of your Zoom, or the chat function. And remember that the Q&A function, maybe it can be public when we respond. So if you have a private question that's unique to your situation specifically, please be sure to chat it to us. And then Bronson or one of his staff can answer you directly. Again, this is being recorded. So we just want to be sure that everybody's privacy is protected. Let's go ahead and put that in the chat as well as the contact information that Bronson mentioned. We have that. Oh, and my chat's disappeared. That's fine. I will get to it in a second. There it is.
I'll just say, Dylan, it looks like there's a lot of activity in the chat.
Oh yeah,
function,
we did.
Which is great. I'm glad people are being active and asking questions.
All right, first one, Bronson. Here we go. And I want to thank Tara for being patient with us, Tara. I'm writing to request that you please work on raising the minimum property tax threshold for manufactured homes in Clackamas County, if not the entire state. Clackamas is currently at $20,000, meaning any manufactured home with an assessed value of $20,000 or less pays no property taxes. Any manufactured home that is $20,001 pays full property taxes. Compared to Multnomah County, where the threshold is $50,000, meaning any manufactured home with an assessed value of $50,000 or less pays no property tax. In addition, any manufactured home that is $50,001 only pays property tax on the assessed value minus $50,000. And then she gives a decent summary of the history of the current situation, talking about House bills and what Multnomah Commissioner Lori Stegman did in that county, and basically where we're at now with Multnomah versus Clackamas. And she ends with manufactured homes are a large growing option for low-income people and families, particularly seniors. In my community, 30% of the homes are valued less than $20,000. With a raise to $50,000, that would cover over 80%. For all, it's the price of at least one rent payment saved. So I was reading that comment to you, Bronson, if you'd like to respond. And also Lynn Longfellow, our appraisal manager, has offered to respond to Tara over Q&A as well, but whatever you'd like to say.
I can address something, and Lynn can also respond. I think you said via Q&A, not over live, but whichever. So I'm sympathetic to yours and anyone's economic situation. These are all hard times that we're all living in, and despite me being the assessor and tax collector, it doesn't give me joy to collect taxes, especially from people that are in a hard economic situation. But addressing the threshold for manufactured structures, yes, Multnomah County does have a higher threshold, the only county in the state. And that amount is determined by, there's a law determined by legislators. Again, back to the senators and representatives. They have that number is indexed every year, it goes up every year, and the Department of Revenue works on that indexing. And the Department of Revenue down in Salem, they send every county, all 36 counties in Oregon, they tell us what the threshold is for any given tax year. So I don't make that determination. We don't make that determination. The Department of Revenue makes that determination based off of the law that the legislators have set. And the legislators, I think it was maybe 2 or 3 years ago, they set Multnomah County's threshold higher than, and they didn't, in the law, it doesn't state Multnomah County. They give an account threshold, and Multnomah County is the only county in Oregon that goes above that account threshold. So it was clear what the intent of the legislators is to single out Multnomah County. I'm not saying it was right or wrong. I'm just saying that was what was clear to me, at least. So we don't have any control over what that threshold is. That is, we just administer what the threshold is given, what the threshold is that's given to us.
Okay. Very good. Thank you, Assessor.
And I don't, Lynn, were you going to respond via online here or in the Q&A?
Hey, Bronson, the only thing I would clarify is that the threshold in Clackamas County currently for this tax year is 21,500.
Right.
And it is also Washington and Multnomah County that have the 50,000. And it's based on population.
Population.
Right. So, but that's the only thing I did.
Yep, thanks for that clarification. And that's right. It is based on population. And yeah, I didn't know Washington County was in that category too. So good. Thank you for clarifying that, Lynn.
All right. And thank you to Tara or Tara. My apologies if I'm misstating the name. For the detailed question. It's good. Okay, one from Raphael from earlier, which a couple people hit on similar, Mr. Assessor. Not all voters, not all of which pay property taxes directly, can vote for bonds that increase taxes for those that own property. Is there a way to ensure there are separate line items for renters that show the property tax portion of their rent, providing a direct connection between rents and property taxes, in hopes of ensuring that all voters, those that own property or those who rent, see the connection between their vote and what they pay?
So there's a lot of information in that question, but if you wanted to, I don't know if somebody lives in an apartment complex, I think they would have to go to the apartment complex manager or owner to see what the pass-through property tax expense is for any individual unit. We don't have that information. As far as the ability to vote and renters versus property owners, even the longstanding dialogue is that it's not fair for somebody who doesn't own a house to also be, and I don't agree or disagree with this, I'm just stating what dialogue I've heard, that it's not fair for people who don't own homes and pay property tax to vote on property tax law. And I would say that each person, even if they don't own a home, they're renting somewhere, and that rent is baked into, the property tax is baked into the rent that they're paying. So and you hit on it, you want to see what it is, but we don't have that information. That information would have to come from each individual property owner if they wanted to reveal that information. The apartment property owner, if they wanted to reveal that information. And that's not something that we ask for, because that's not something that goes into property valuation on our end.
Okay, very good. Thank you, Assessor. Next up, why can't residents pay property taxes with credit cards?
Okay, so right now you can pay with a credit card on the line. If you go to our website, there's a button you can push to pay online. However, currently we don't have the ability for people to pay with credit cards over the phone or with point of sale machines if they come into our office on our front counter. We are working on getting those, and hopefully by next tax season, we'll have those other two options in place. Those other two options, again, being the point of sale machines at the front counter and the ability for somebody to call in and pay over the phone with their credit card. But again, currently, you can go to our website and go online and pay with your credit card.
Very good. Thank you, Assessor.
You're welcome.
All right, next up. Do we have any legislation in the pipeline to put freezes on property taxes for seniors? I remember a gentleman running for office ran on the plan to cap property taxes on primary homes when people reached age 65. It is very, very tragic when people have to sell because they can no longer afford their taxes on a fixed income. This is a very real scenario that is happening to many older folks. So again, the main question, is there any legislation, I guess that you know of, Assessor, in the pipeline to put freezes on property taxes for seniors?
Yeah, I'll just say first that it is unfortunate when those situations occur with people on fixed incomes or on any income for that matter, where property taxes cause a big hurt in their pocketbook and they're unable to maybe pay for something else. Those are definitely situations that happen, and I don't like it. Right now, I don't know of any legislation, but the legislative process hasn't begun yet for 2024. 2023, it's over. 2024, it hasn't started yet. And I've heard of the concept you're talking about in the past, having tax freezes or some sort of tax discount for seniors. I've been in government since 2011, and I used to work down at the Department of Revenue. And that seems to come up almost every legislative session, either property tax reform or the idea of giving property tax breaks to seniors or other populations that people feel need a property tax break. Around the January timeframe is when things start to get rolling. January 2024 or any years when things start to get rolling for legislative sessions, and that's typically when discussions of property tax reform or discounts to seniors come up. So not yet, but maybe in a couple months, I might know more. So you can feel free to shoot me an email or give me a call, or find out who your representative or senator is in your area and call them and ask them. They certainly have they're more on the front lines than I am when it comes to legislation down in Salem.
Very good. All right. Thank you for the question. Next up, just a comment. Somebody said, excellent presentation and thank you for all the information. Truly appreciate it for the clarity. That was nice. Thank you, Jonathan, for that. We've been answering, your staff's been doing a great job, Mr. Assessor, in answering a lot of just very specific questions to people. So very good.
Thank you, Jonathan, for that comment, and thank you, staff, for taking care of all these questions. I appreciate it.
Next up, Bronson. The threshold limit for improvements to a property is $18,200 per year and $45,000 for 5 years. How would you be taxed if you make an improvement of $20,000 in year 1 and no more improvements the next 4 years?
So $20,000 goes over that 18,200 threshold. So that if we valued it, if that's the RMV, then we add that RMV onto your RMV value, and then the CPR is applied for that year, and that is added to the maximum assessed value. And that could cause taxes to go up more than 3% for that year.
Very good.
But if you had $18,100 in real market value, then for 1 year, then it would not go on your property taxes or your real market value. And I will say one more thing on that.
Mm-hmm.
So if it was, say, 20,000 that we put on there, and you thought that's overvalued, then you can appeal that, and we'll take a look at it.
Okay, excellent. I don't see any new questions in question and answer. I don't see anything that I've missed in the chat. Sherry did say, great presentation, lots of helpful information. Thank you, Sherry. Very good. And people are thanking you for the information, like Tara, who we read her question before about the Multnomah County limitations versus ours on the 20,000 versus 50,000.
You're welcome.
There are no more questions right now, but people might be writing them out. So I'm inclined to give people, a few more minutes to Mr. Assessor to just go ahead and write anything else out, if that's okay with you.
Yeah, that's fine.
Then if none comes through in the next minute or so, or 2 minutes, then I guess we can.
Do
end
you
it.
know, Dylan,
Mhm.
do you know if there's any of my staff that are still answering questions in the chat or in the Q&A? I don't know if you have.
I don't believe so, Bronson. I think everything is up to date. Oh, did you want me? One thing I could do if you wanted me to share my screen, you said you wanted the credit card payment. Do you want me to navigate real quick and you can show
Yeah.
where that is?
Yeah,
Okay,
sure.
That
That sounds
second.
great.
Sure. Okay, just so everybody knows, so we'll give somebody a chance. All right, let's share the screen and then. Bronson, you can drive. You see my
Oh.
screen here? Do you see the Clackamas website?
I do see it.
Okay, so then anybody can go either to clackamas.us/AT for assessment taxation, or you can hit departments and assessment taxation, first one, because it starts with A. All right, and Bronson, where can people go to pay?
Okay, scroll down, scroll down, stop for a second.
Okay, is it
Scroll
make a
down,
payment?
stop, make a payment. Yep, right there, make a payment.
And there we go. Ways to
Way to
pay.
pay. So scroll down more.
Pay online.
Online, right there, pay online.
Right there.
And if you click on that pay online, and there's the fees if you do pay online.
Yep. You can
And
pay your
again,
bill online.
just to clarify, Dylan, there are fees on there. We don't collect any of those fees. Those
Right.
are fees that are typically charged by credit card companies or by your bank if you use a debit card. Retail vendors typically absorb those fees, but statutorily, assessment and taxation departments across Oregon cannot use general fund dollars to pay for those fees.
Mhm.
And so those are, since we can't charge them, and the credit card companies, they say that they're not going to waive the fees on property tax payments, then those fees are passed on to anyone using a credit card or a MasterCard, bank card, debit card.
Got it. Okay, the only other comment that has come through is from the individual who asked about the threshold limits for the 20,000, just saying thank you for this very informative presentation.
You're welcome.
There we go.
And thank you for joining in.
Yep. So I guess with that, unless I see anybody else come in, I guess we're going to go ahead and wrap up tonight's town hall. So I want to thank all of our guests here tonight and everyone who joined us online. Got a lot of good questions, got a lot of high participation, a lot of attendees, so that's good. So Assessor Rueda, do you have any parting words for those who have tuned in?
Sure. Similar to your comments, Dylan, I want to thank everybody that joined us tonight. And I want to thank you, Dylan, for facilitating. Job well done. And thank you to my staff that worked overtime tonight to support me and our customers. And again, if you have any follow-up questions, anything that you think of later on, feel free to call our office, email our office, and we can help you along your property tax journey. And I think Dylan mentioned this already, but starting sometime tomorrow, this presentation will be up on YouTube. And I think there'll be a link from our website as well to this presentation that you can watch it again, or if there's something you wanted to revisit, you can certainly do that.
Yes, we can make that happen, Mr. Assessor. Okay, excellent. Well, for Clackamas County again, and for Assessor Rueda and the A&T staff, thank you very much. Have a pleasant evening. Thanks for joining us.